स्टार्ट करूया वे
जायद
हाँ उमापति
नास्य समारंभा शंकराचार्य मध्यमा अस्मदाचार्य पर्यंता स्मर्या गुरु परंपरा श्रुति स्मृति पुराणानाम् आलयं करुणालयं नमामि भगवत्पादं शंकरं लोकशंकरं शंकरं शंकराचार्यं केशवं बादरायणं सूत्रभाष्यकृतौ वन्दे भगवन्तौ पुनः पुनः ईश्वरो गुरुरात्मेति मूर्तिभेदविभागिने व्योमवद्व्याप्तदेहाय दक्षिणामूर्तये नमः। परिज्ञानाश्रम श्रीगुरुशङ्कर परिज्ञानाश्रम शङ्कर सद्गुरु केशव वामन कृष्ण पाण्डुरङ्ग आनंद परिज्ञान गुरु सद्यो जात शंकर सद्गुरु गुरुर्ब्रह्मा गुरुर्विष्णु गुरुर्देवो महेश्वरः गुरु साक्षात् परब्रह्म तस्मै श्री गुरवे नमः। ओम सहना भवतु सहनौ भुनक्तु सह वीर्यं करवावहै तेजस्विनावधीतमस्तु मा विद्विषावहै। ओम शांति शांति शांति।
धन्यवाद उमापति for the opening prayer. On behalf of Kanara Saraswat Association, Chitrapur Saraswat Network, सगळ्यांकाय एक warm welcome. I'm hunting for Konkani words, but जायनी झालं इंग्लिश आणि तो उलयता. KSA CSA नाचे एक सांज इंट्रोडक्शन दिवंच म्हळ्यार कॅनरा सारस्वत असोसिएशनान 2019 अंतू CSN परत reintroduce adopt करून reintroduce केले with the active support of Praveen ma'am and Kishore ma'am and led by Rajiv ma'am. स्वाम्यांगल ब्लेसिंग्स घेऊन गुरुपौर्णिमे वेळा वेबसाइट इनॉग्रेट झालेला आहे. द ऑब्जेक्टिव्ह ऑफ CSN इज टू गेट भानप एंटरप्रेन्योर्स टू गेट टुगेदर बॉन्ड अँड चिके एकमेकांक हेल्प करून की कोणाक म्हाका समजा हे कॉन्टॅक्ट जाय ती ते शेअर करून देन बाकीची लोक प्रयत्न करतले की बाबा की कॉन्टॅक्ट मेळट की कनेक्ट करू जात की सो दॅट ते बिझनेस वाढता. आमगेल बरेच ऍक्टिव्हिटीज असतात ती मुलाखत असतात ती वर्कशॉप्स असतात ती आयचवारी एक वेबिनार्स असतात ती मागीर आर्टिकल्स बरयता ती की द CSN पेज म्हणून KSA मॅगझीन आणतो आर्टिकल्स आणि इन्फॉर्मेटिव्ह नेटवर्किंगाचेर आर्टिकल्स डोमेन एक्सपर्ट सांगले येता ती विल बिकम मोर रेग्युलर नाव. आणि एक म्हळ्यार ECM म्हणून एंटरप्रेन्योर क्लब मीटिंग्स मध्यांची स्थगित झालेला आहे. आता मी परत या मुखावेल आयतार फायलाच नाही मुखावेल आयतार धरून परत सुरू करतस ती. आणि these two meetings will be for major focus will be on lady entrepreneurs because this is a business Valentine week month. आणि दुसरं माय will you be my business Valentine म्हणून एक फीचर आम्ही ट्राय करतस ती where two people will get together and work together for a month. एक महिनाभर किंवा 15 दिवस अशी anything social economic business personal they can keep in touch and get to know each other well. And by the end of the month तांकां comfort level बरे असतले so that they can start helping each other. हे अशी एक दोन्ही प्लॅन्स असतात. सो तुमगेल ज्या कोणी CA भानप फ्रेंड्स असतात ती एंटरप्रेन्योर्स तांकां हे मीटिंग अटेंड करू सांगा. ती लिंक आम्ही ग्रुपार पोस्ट करतली. विथ दिस शॉर्ट इंट्रोडक्शन ऑफ CSN can I request Kishan ma'am to introduce आमगेल आयचे स्पीकर शरद राव. एक मारी सांगची म्हळ्यार आमगेल people हांग कोणे CA असले रे other than me and Sharath and Sandeep ma'am they will know that every year पहिले budget म्हळ की बंसी मेहता लेक्चर असताले the next day or third day of the budget at CCI launch Mumbai. तशीची आमगेल भानप CA आणि भानप लोकांक खातीर शरद मामाले लेक्चरात हे सेकंड इयर ताक रिक्वेस्ट करून he has kindly agreed. सो आम्ही ते एक रेग्युलर फीचर करूक परसुएड करूक आम्ही विनंती घाल्या he will probably accept it in the due course of time, and we make this a regular feature. Kishan ma'am, can you do the speaker introduction, please?
Yes, thank you, Gautam ma'am. Jai Shankar. It gives me pleasure of introducing C.A. Sharar Yallur. He is a commerce graduate from Mangalore University, a chartered accountant and a lawyer. C.A. Sharar Yallur specialization in tax and regulatory advisory, which includes income tax, GST, RBI, FEMA rules, SEBI, and company law. In his professional career spanning nearly 18 years, he has been actively engaged in advising corporate sectors in IT, financial services, real estate, infrastructure, and consumer services. He represents corporates at the income tax tribunals and other appeal forums. He is an avid sports enthusiastic, and he was part of under 19 cricket team. And Sharad Mam is also a member in our finance committee of Sri Chitrapur Math, Shirali. Thank you. Over to you, Sharad Mam.
Jai Shankar, Gautam ma'am, Rajiv ma'am,
Jai Shankar.
and other members of the committee. Thank you for giving me this opportunity of speaking. When Gautam ma'am made a reference to Bansi Mehta, I think more than it being an honor to me, I would think it's a little bit of disrespect to the great stalwart, because I'm nowhere comparable to him. So the way I look at it is that by getting an opportunity to speak before all of you, I also tend to enrich my knowledge, because otherwise I may not have done a very fine reading of the budget otherwise. Of course, as part of my professional practice, I do have to look at it in respect of the tax changes, because the moment the budget is presented, many clients start calling. So if you don't have answers, then it becomes a very difficult situation. So only for that reason, I end up reading the tax portions of the budget. But more often than not, the main budget, I'm not an economist in that sense. So most of it goes above my head. And when I see the percentages and then the numbers, etc., I still am not able to understand why do they go deep into those numbers. In my view, the budget has to be a very simple document, but year on year, it looks to be a very complex document. And as professionals, if I myself am not able to understand the budget, I sometimes fathom कि other people kashi tani interpret this budget. And to add to the confusion in the run up to the budget, the whole social media is not helping these days. We see a lot of I would call them as wannabes talking about the budget. They may not have any knowledge about it, but they talk about it. So you have a number of views on the budget, and as a common man, you're not able to understand what is this all about. So I have made it a point to not listen to any of these pre-budget analysis or expectations. The best thing to go to a budget is to not expect anything. That is my principle, and I've been following that for the last few years. Don't expect anything from the budget. It is better to go with an open mind and see what happens and try and understand to the best one can understand to see what the budget is all about. To explain what is the budget, a budget is like any budget. It can be a household budget, it can be a small business budget, it can be a complex business budget. The only difference is, being the central government, the union budget is very complex, unfortunately. It's a simple statement of what is the forecasted receipts of the government in the next financial year, starting from April 1, 2022 up to March 23. That is our Indian financial year. What is the anticipated receipts and what is the anticipated expenses? More often than not, many of the government budgets have what we call as a deficit budget, which is essentially where they end up spending more than they earn. That is quite obvious, because as a government, they always have to work on a non-profit basis. In a government's case, it is most always on a loss basis, or their expenses or payments exceed the receipts because they have to spend. That is the simple principle. So I think to make it very simple, budget is expected receipts minus expected payments. It always shows a deficit or a loss in simple terms because they have to always spend as a government. Otherwise, the country will not progress. That is a simple principle to understand what the budget is. As compared to any business related budget, they will always project a profit. Here we'll not have a profit. That is the only difference. So with that brief introduction, I will present this. Gautam ma'am, kitla time hai, sir? What is the time that I have?
Not a problem. Not a problem. Time is not a issue.
Okay. So I'll try and wind it up in an hour's time or maximum by 8:30. Magiri, including me, everybody will start feeling hungry. So I would rather stop at that time. So let me just share my presentation. Give me a minute. Is this one?
वय चिके फुल स्क्रीन करू का?
एक minute.
झालं, समायले.
Okay. So there are about 50 odd slides. Any questions and answers? Do we take it in the end? Gautam?
Zai, whichever, whatever is your comfort level.
Yeah, I would rather do it in the end because madhentu it may just derail the whole presentation.
No problems. No problems.
So this is what I plan to cover. There are totally roughly about 50 odd slides, but and I will follow the same format which I did last year. To some of you who may have attended my last year session, you may have seen the format. I would start with talking about key highlights, and I have stopped at 10. So to make it 10 key highlights of this budget. Then what I have introduced this time is to draw a progress card, because I had the benefit of knowing what the last year budget points were from my last year's presentation, what were the proposals, and I have done a status reality check of where we stand today or where the government stands today in terms of implementing those proposals, so that we get a realistic view about what has happened to the proposals. Now, unfortunately, the government in its budget document for some reason doesn't ever show a progress card. There will be some talk about it in between the lines saying this is what we said last year, this is what we've achieved this year. But the way I would want to see it is to say, give me a table, tabular presentation. These were the 10 or the 15 key proposals that we made last year. This is where we stand. Now, for me, as a common man, that gives a realistic idea of what the budget said last year, what has the government done in terms of implementing it. But unfortunately, for some reason, for reasons best known to the government of the day, they never present a progress report. So we as common citizens have to sit and rack our brains and see, okay, where does the government stand? Otherwise, the budget exercise every year becomes just a religious exercise. Every year you come and present something, say something before the parliament and go. Don't know what happens after that. So I have given my attempt in trying to see what has happened, at least for 3 or 4 key points of last year compared to where the government stands. So then I will talk about the fiscal position, and this is the part that I don't like so much, because this is all about graphs and percentages and so statistics, which as not only an economist may appreciate it better, but I have tried to decipher it to the best extent possible. Fourth is I have tried to focus more on the personal tax related position, and not only on amendments, but try to give an overall picture of what is the current taxation scheme for salaried individuals, what is the current taxation scheme for sale of assets like shares, bonds, etc. I've tried to present a consolidated picture. Then I will talk about the changes in relation to charitable trusts. Some changes have been made, and this year it looks quite a bit. Then I'll talk about MSMEs, medium to small enterprises, on how budget impacts them, if any. Then there's a whole section on corporate tax, which I will try to not spend so much time because some of those are very hyper technical and procedural. There are no significant headline changes in that sense, and a few indirect tax changes. Again, nothing very significant. So overall, this year's budget, if somebody reads the budget, and these are my 10 highlights, 10 main points. But one significant feature that you may have noticed, maybe when you heard the budget speech or when you may have read the budget speech, is that there is no reference, there are no, what should I say, announcements being made focused on any specific state. Now, hitherto in the past budgets, we used to see that they used to come up with some new projects targeted at some specific states because the ruling government may be focusing on those few states like Gujarat, Maharashtra, etc. But this year, and for obvious reasons, they have not made any state specific announcement. The reason is simple. We have 6 states going for elections soon. By April or so, all the elections will be done. Uttar Pradesh being one of the biggest states. So there is a model code of conduct which is applicable, and that applies to the central government as well. So therefore, for that reason, they have not made any state-specific projects or announcements. Then you may ask, okay, there are other states who are not going to the elections. Why can't they make announcements for those other states? Now, they also can't make announcements for other states, or again, a logical reason that if they make an announcement for a non-election state, then people of the election bound states may feel that, oh, we are being left out. So that is how I have reasoned it out. So it makes sense to not make announcements for any state. So you will not find a single reference to any state related announcement. Of course, on a cumulative basis, they have said we will give so much to all the states, etc., but nothing very specific. That is one standout feature of this year's budget. Now, if you look at some of the key points, and these are, in my view, some of the very key highlights, and I'll try to make it as simple as possible in a simple language and not get into very technical jargon. So they have allocated a very high amount towards capital expenditure, which is about 7,50,000 crores or 7.5 trillion. And this is about 35% increase compared to last year's budget. And this is a very good move. Now, on the face of it, it looks like, so what? What's the big deal? But if you look at it, they are going to build assets out of this money, roads, infrastructure, building. Now, you may again ask, so what's the big deal? We know the history of governments and how good or bad they are at implementing these projects. But assuming all this money actually goes into these assets, it will have ripple effect. It is what we call as a multiplier effect on the economy. It will attract more private investments. The money that will be spent will go to some contractors, and then the contractors will be passing that money to their employees. So this is how the ripple effect happens. Private investments will come in. So every rupee of investment means there will be some return coming out of it. And from an overall basis, there will be more job opportunities, employment will go up. And of course, the infrastructure itself will go up, which will bring in a lot of efficiency. So that is why this point is important. Second point that is important is that they have now said that we will convert all the 1.5 lakh post offices in the country to deploying core banking systems, CBS, which is the main backbone of our banking system, the main software. Now that will also be introduced in post offices, and this is again significant because, as you all know, the kind of reach that our post offices have, to remotest part of the country, banks also don't have. So therefore, to get this in post offices and to make them work like a bank with the internet banking facility, mobile banking, I think it is very remarkable. Coupled with the internet reach, which the government is trying to give to villages and far off places. So internet plus core banking in post offices, I think collectively it is a very good initiative. So people in remote areas can also use all the facilities which a banking system will be able to provide. It will also help them to get into the digital payments. Today we have apps for anything and everything. You can use the apps to make payment or receive payment. So only thing that was missing is the core banking system, which is now being introduced in all post offices. In my mind, this is again a very significant proposal. Of course, we'll have to see how they will implement this. If done well, this is a very good initiative. The finance minister spoke about Amrit Kal, which is nothing but the next 25 years run up to the 100th year of our Indian independence, 2047. So these are some of the initiatives they have spoken about. Again, one point that stood out and which caught my attention is the single point access for all citizen-centric services. So this is where they said they will work with the state governments, ensure that all services are brought to the doorstep of the citizen. All that the citizen needs perhaps is a mobile phone, internet, and an app. And this will help in giving tension-free services to the citizen, and also tries to cut down the time where somebody has to go to a government office and get things done. For example, let's say a khata, something as simple as that. If it is all found in an app, then it will improve the standard of living of everybody. It saves time. So this again is a good initiative. Fourth one, they spoke about drones for kisans, aimed at crop assessment and a very significant part towards digitization of land records. So if a drone is going to get the space mapping done and it helps in digitizing of land records, I think this is again a great initiative. And again, they have said that we will start something called, we will help startups to get into drone as a service, DRAS. So this is again something very out of the box, I would think, and very futuristic. And this will also be helpful in deploying drone technology for better uses. So this again is a good proposal. The fifth one, which is spoken about, and this is a very important change, the central bank digital currency. So here, what all of us may be aware of cryptocurrency. Some of you also may be active investors in cryptocurrency, and some of us like me, I am still very new into this crypto world. I still don't understand what this crypto is all about. I've stayed away from this, not because it is currently illegal, but just because I don't really understand the technicalities of this crypto market. So the government is saying that we will introduce a digital rupee. Today, all of us see rupees in coins, and we see in paper notes. We also see, to a certain extent, digital rupees in our wallets, like a Paytm wallet or other wallets. That is the best extent to which we know of digital money or digital rupees. Now here what they are saying is that we will have RBI issue a digital rupee as a legal tender. Now this is again very interesting. It is I think very difficult. It is not as easy as it is said, because it needs a whole infrastructure around it. It needs a whole network around it. It needs that security around it to ensure that the transactions in digital rupee happen seamlessly and without any frauds getting committed. Now, the difference between a digital rupee and a cryptocurrency is that cryptocurrency like Bitcoins and Doge coins and Ethereum, etc., those are all cryptocurrencies. Digital rupee is issued by the central bank of any country. As of today, there are a few countries which have already issued a digital currency from the central bank. China has issued that there is a digital Chinese yuan. I think UK is also in the process of issuing. European Union is also issuing. So there are a few countries who have already in advanced stage of issuing a digital rupee. So India is also in that sense in fifth or sixth in the line, which is a very bold move to get its central bank to issue a digital rupee. But having said that, it needs a lot of planning and infrastructure to be put in place first before a rupee can be issued. What does it mean is, you can think of this like any other wallet. It is like having a bunch of 100 rupee notes or a 500 rupee notes in your digital wallet, maybe, and you may not have to carry your regular wallet. So you don't have to be worried about losing your physical wallet. Of course, you may have to be more worried about somebody hacking your digital rupee wallet.
Sharat, can I just say a word on this?
Yes.
Because I this is close to my heart as well. On digital currency, what it means is that it will be fungible against the physical currency which you are having right now. So if it can be actually exchanged, the digital currency can be exchanged against the physical currency. And when you talk about digital currency, there is no problem in terms of whether it will get lost or whether it will get hacked or anything of that sort, because the digital currency will be on a platform which is called blockchain technology, and that is the reason why it's coming in. So it cannot be hacked. It is very transparent, and there is no question of hacking, or it'll be very, very safe. That's all I just wanted to let you know. I'll come to the other parts later, because I just wanted to chip in here with this additional information.
Sandeep ma'am, I had a point. I mean, there is still a lot of discussion around whether blockchain itself is the right one to be used here.
No, because and blockchain. Okay, I'll come to that. You can ask that question at the end. I'll answer that at the end.
Okay, thanks, Sandeep ma'am. Yes, I think all of us are in a little bit of awe at this stage, not knowing what is in store. We'll have to wait and watch. I think the main difference would be that the cryptocurrency would be encrypted. From what I understand, the digital currency cannot work in an encrypted fashion. So that is the difference. Maybe you can shed more light on this towards the end. So this is the other announcement. Of course, the Reserve Bank has to now step in and come up with their plan on how to implement this. The other announcement which was made is what they called as, and this is more a tax announcement, to say that they're going to tax income from sale of virtual digital assets. Now, this VDA is nothing but cryptocurrency or NFT, the non-fungible tokens, which you may have heard and read of. And there are so many other similar digital assets, which today there are a lot of transactions going on in India and everywhere in the world, and even Indian citizens are engaging in transactions in cryptos and NFTs. Nowhere has the government said that we are not going to tax it. Even earlier, there is no statement that they've made that they're not going to tax it. What is in my mind, a cryptocurrency or NFT is like any other asset that you hold. It is like a share, or it's like a unit, or it's like a security in that sense. So therefore, whatever tax principles apply to taxing income from sale of assets, the same principle would apply to these assets. It could be long-term holding, it could be short-term holding, etc. Now, what they have done is to try and remove this whole confusion about what is the rate at which they are going to tax income from sale of digital assets. That is all that they have done. They have now said that we are going to tax it at 30% on the gains. The very next question that will come to our mind, and there is a lot of discussion available on this in social platforms. Does this mean that they have made something like a cryptocurrency or NFT legal. Today, there is no stated position. 2 years back or 3 years back, the Supreme Court struck down an RBI circular which had directed banks to not promote transactions in cryptocurrency. The Supreme Court struck it down. Thereafter, last year or so, there was a bill that was floated for introduction in the parliament to regulate these digital assets and cryptocurrencies. There was an expectation that this bill will be introduced in the current budget session. It has not been introduced. Rather, they have gone one step ahead to just confirm that they're going to tax it. Now, this, one may think, leads to a very peculiar situation where the government is wanting to collect tax on something which they have not made the position clear about. Whether this is legal, whether this is illegal, it is still not clear. Whether one can hold as an individual a crypto asset, it is not very clear today in terms of the legality of it. But I would think we have gone a little more closer to assuming that the government will make this legal, and it is in the works. I think they will come out with the final draft of the law. And in my mind, and maybe Sandeep Ma'am can add later, in my mind, they may not completely ban these cryptocurrencies because in a way they have given some sanctity to taxing income from it. Now, in taxation, we have a rule to say that whether you're doing illegal business or legal business, whatever income you earn, if you are a smuggler, if you are earning income from smuggling and if that is detected by the tax office, they are going to tax it. Because taxation is on income. It doesn't depend on whether what you're doing is legal, illegal, or prohibited. So that is the rule that they have followed even in the case of digital assets. So therefore, we don't know, but general mood is that they may confirm that this is all fine. Of course, they will come up with some exceptions and how they will regulate this whole cryptos and other digital assets. But in my mind, they are going to not completely ban it. That is about digital assets. The other important thing is they also spoke about something to do with the EV, electric vehicles. They said that we recognize that we have space constraints for providing charging of batteries which are used in electric vehicles, be it two-wheelers or be it four-wheelers. So therefore, they said that we will alternatively promote something called as a battery as a service. So it's a battery swapping policy. Rather than having charging points in public areas, which will take time, you'll have to identify a place, you need to have an infrastructure. What they're perhaps saying is that if somebody needs to replace a battery for their vehicle, there will be specific points which will provide those replacement batteries. So it's a battery as a service. This is also a good initiative. And of course, in the longer run, I think we still need to have those battery charging points. But in the interim, battery as a service is a good concept. Defense expenditure, they have allocated more of the defense expenditure for domestic industry. Now we all know that the defense budget of India relies largely on imported defense equipment. Over the years, they have been trying to indigenize the defense manufacturing, and this year also they have said that we want our own country to manufacture more of this defense equipment. So there is an increase of 10%. And the other important thing is they've also said that we will open up for defense R&D for private sector and for startups, with 25% of the R&D budget being earmarked for this. This is again a good step to make it more inclusive and to make it more indigenous. Education, 2 years of pandemic, we saw how mostly in the rural areas, students have suffered. I think it's a practical problem that our rural areas don't have enough of internet reach, and education schools were not running to its best. So what they are saying is we will introduce more education channels, what they're calling as one class, one channel, which today there are, I think they have said we have 12 channels. We will increase it to 200 TV channels through which education will be provided to far off areas where there may not be internet access. That is a good thing. They have also spoken about setting up a digital university, providing remote access to students, and they will also invite foreign universities to be part of this digital university. These are all good things to hear, but in my view, the proof is in the pudding. We'll have to see how they will implement it, and more importantly, how soon they will implement. Because I think the pandemic and the after effects of pandemic are here to stay for some time. We don't know how many waves are going to come, and therefore we need to have a permanent plan to address this problem. Otherwise, education is going to perhaps remain behind and not catch up. Infrastructure, they have spoken about rolling out the 5G spectrum auctions in this year, the next level of mobile technology. Today we are in 4G. Many countries have already gone into 5G and maybe 6G or 7G. We need to get into 5G sooner than later. They've also spoken about laying optical fiber cables in rural areas. Sorry, there is a typo. And there is additional 195 billion allocated for production linked incentives. I'll talk about it a little later about PLI when I draw up the progress report. So these are the 10 important changes for this year's budget. Now here is my progress report, which is what I have done to compare the last year's proposals with where we stand today in terms of implementation. Last year, I had spoken about one of my points in the 10 points of last year's budget was the very aggressive disinvestment and privatization plan of the government. What is disinvestment? Disinvestment is where the government reduces its equity holding in public sector enterprises. These are big public sector enterprises to sell off their equity and make realize some gains, which will then be redeployed back into the expenditure side. That is disinvestment. Privatization is where the government completely gets out of a public sector enterprise and it no longer controls that business. Air India is an example. So we've all seen how the Air India sale happened very recently. That is an example of privatization. Disinvestment is example for disinvestment is the upcoming LIC IPO. LIC, as we all know, is going for a big bang IPO. Government is expecting to collect 1 lakh crores, which is a huge amount. But that will be represented only by a small percentage of equity dilution. So they're not going to cede control over LIC. They're just going to sell some equity in the IPO. So last year they set a disinvestment target of 1.75 lakh crores. Compared to that, I did some analysis as to where the government stands today, and the disinvestment progress has been very, very slow. So in fact, it is only about 12,030 crores that they have collected from disinvestment compared to 1.75 lakhs. So it is not even 10%. They have not even achieved 10% of the plan. So what did they do in this budget? They have revised the disinvestment target for this fiscal 21-22 downwards to 78,000 crores. So almost half of the original plan from 1.75 lakhs, they have revised it now to 78,000. But currently what they have achieved is only 12,000. So there is still a gap, 78,000 to 12,000. So about 65,000 is still yet to be achieved. And therefore, where will this come from? In my mind, I think most of it is going to come from the LIC IPO, which should happen by March 31st of this year, because they're anyway targeting 1 lakh crore. So that will easily bridge this 60,000 crore of deficit. But look at the planning here, 1.75 lakh, they said we will achieve, but now they have revised it by half and they're still to achieve it. They've not even achieved it. So this is one area I think the government has to focus. Historically, the governments have failed miserably in getting their act together in achieving these disinvestment targets. How will it help? It will help a great deal in reducing the fiscal deficit. So the money that the government makes from this will be available. It will reduce the fiscal deficit. They have to borrow lesser. So that is how it is going to help. So in my mind, it's no brainer. They should focus their time and energies on this and get their act together in actually achieving these targets. So the other point they spoke about last time was what they called as a bad bank, the National Asset Reconstruction Company. Essentially, most of our PSU lenders have NPAs, non-performing assets, where these are mostly not recoverable. The idea was to have all these NPAs consolidated in one single special purpose vehicle, SPV, and then there is a focused plan and action in trying to recover as much of these NPAs as possible. So again here, nothing happened until 2 weeks back when this NARC was set up. NARC is the special purpose vehicle, National Asset Reconstruction Company, which is owned by all the PSU banks. And the 50,000 crore distressed assets will be transferred to this SPV. So we're still talking of transferring it. Nothing has been done till now. We are almost about a year from the last year budget. So it will be transferred now. There is an agency which has been identified, which is the Indian Debt Resolution Company. Now, while all these 50,000 crore of distressed assets and NPAs will be transferred to NARC, there has to be an implementation agency who will go and identify potential buyers for these assets at a discount, obviously, and see what best can be realized. That implementation agency is Indian Debt Resolution Company Limited, which is again a SPV owned by private sector banks. So the framework has now been at least set, and we'll have to see this getting into action soon so that there is no further delay on this. So that's why I put a play button to say it is action in motion. At least something has started here. The other part is they spoke of a development financial institution for SPV for funding infrastructure investments. Again, a huge budget here. There was talk about a separate bill that had to be introduced. I could not come across. So there was a bill that was passed in March, but it was only a bill. Operations have commenced, but there is very slow movement. Again, the government's equity in this is 20,000 crores. On the back of that equity, they're going to seek a leverage or a debt of 3 lakh crore, which is a very large amount. And this amount will take care of only 111 trillion for the infra projects of about 7,000 in the pipeline up to 25. So on an overall basis, this is still a small amount, but I think again they have to get their act together and start implementing this. This is very important because this is targeted at infrastructure. Production-linked incentives they announced last year. What is the production-linked incentives? It is nothing but part of the Make in India program. India today lags miles behind manufacturing and factories when compared to China. So the plan was to indigenize manufacturing in India, promote domestic manufacturing, set up more factories in India. India today is a leader in the service sector. I think more than 50% or maybe 40 to 50% of our GDP comprises of service sector. Manufacturing sector is still in the 20 to 30%. So the idea is to try and increase that and have domestic manufacturing. So towards that, the government said we will have these schemes where based on a combination of the investment that a private sector company puts in and the turnover that they achieve, we are going to give you a percentage of your revenue as subsidy or as cash subsidies. This is an incentive that the government is going to give to the companies. And there is a lot of interest for this. Mobile manufacturing companies like Xiaomi has set up a huge plant. They have been selected under this scheme. Many companies are interested. This is a very successful scheme. They have expanded the scope as well. Initially, they were targeting only 3 sectors. Now the number of sectors has also gone up. And I see this live in my practice. Many companies are showing interest. So this is a very good initiative. And I would give a green tick to this because they have achieved quite significantly on this. So these were the few points on the progress report. Now, quickly to summarize the fiscal position, the GDP is expected to grow 9.2% this year, that is FY22. Next year's is a slightly lower number of 8.5%. The fiscal deficit is again 6.9% of the GDP, So the GDP base is higher, so fiscal deficit is also higher, which means they're spending, which is good. Spending means growth. I spoke of the multiplier effect, the ripple effect. So hopefully this fiscal deficit will come down as and when the government realizes the disinvestment and privatization plans, which I spoke earlier. Also, the tax revenues have been doing extremely well this year. So the last quarter, that is Jan to March quarter of FY22, they have done a very conservative estimation of tax, and that's why the fiscal deficit is 6.9. Actually, in my mind, it should be a lower 6.6% because the tax revenues will actually go beyond what they are expecting. So that is about the fiscal deficit. I'll not, burden you all with more of these numbers and statistics. The INR to dollar Rupee has appreciated slightly compared to April to December 2020. It was 74.63 on an average. This 2021, it was 74.28. So on an average, the rupee is doing well. Now, a quick snapshot of the tax collections and the tax to GDP ratio. If you see the first chart, the orange line is the indirect tax collection, which is GST, customs, excise duty, etc. Today, most of the indirect taxes is represented by GST. You may have read about the fact that our GST collections are at an all-time high. So we have touched 1,40,000 crores, and we will soon be passing 1,50,000 crores, which is a very high number compared to the expected average monthly collection of 1 lakh crore earlier when the GST was started. So if you see the blue line, which is the direct tax collections, historically it has been more than the indirect tax, the orange line. You may see a trend where the GST collections, if you see the last 11.08 and 11.02, the indirect tax collection is almost equal to the direct tax collections. And if we continue this trajectory of the orange line, I think very soon the orange line, which is indirect tax, will go above the blue line, which is the direct tax collections. So the 1,50,000 crore plus collections will topple the direct tax collection, which is a good feature in that sense. And if you now look at the second chart, the tax to GDP ratio, again the tax to GDP ratio is doing well. If you look at the original budget estimates of 2021-22, last year budget estimated that we will have a tax GDP ratio of 9.9, the gray line, whereas the revised estimates as of today for fiscal 21-22 has gone up by 100 basis points to 10.8. It is a very significant jump, which shows that the tax collections have been very good. So you may ask then, why didn't they not reduce the tax rates this time? I'll come to that later on. But that has a larger picture, and I don't think it's an easy decision to make to reduce the tax rates, because these collections are required to plug the fiscal deficit. If the government doesn't have money, they'll not be able to spend. So we will not be able to enjoy the ripple effect of the government's expense. So in summary, the tax collections have done very well. Nowhere in the past, I think long back, they may have gone up by 100 basis points, but this is the first time the tax GDP ratio has gone up 1%. This is a good sign that the economy is doing well. This is about revenue deficit and fiscal deficit and primary deficit. So just a quick introduction. What are these three deficits? Revenue deficit is simply revenue income minus revenue expense. That is the orange line. The primary deficit is, and the fiscal deficit is nothing but total expenses minus total income. It includes capital expenses also. That is the fiscal deficit, which is on the top green line. And what is primary deficit? Primary deficit is nothing but fiscal deficit minus interest payments. So the primary deficit will always be lower than the fiscal deficit, but primary deficit is an indicator that without the servicing cost of borrowings, where do we stand in terms of simple income minus simple expenses? There will always be a deficit, and that is why the government borrows. That is where the interest cost comes in. So this is a simple analysis of the three forms of deficit. This is where the government is spending on different parts of different sectors. If you see the green chart, green bar is for the next fiscal that is estimated. Generally, it is more than the 2021, which is blue, or 21-22. It is more than the previous years, which is good. Only if you see civil aviation has dropped, and I was doing an analysis of why. And this is because the government has there is somebody's mic which is on. Can you please mute it? Thank you. So the civil aviation spend, the green chart, that is the only one which is lesser than the previous year orange. And the reason may be because the government has started privatizing a lot of the airports. Most of the airports historically were controlled and managed by the Airports Authority of India. In the last year or so, they privatized 6 of these airports, like Mangalore, Trivandrum, Lucknow, Jaipur, Guwahati. All of this went to the Adani Group. And Adani Group was the highest bidder. In fact, they bid almost 2 times of the next best bidder. So they are Adani Group is doing these 6 airports. Now there is a fresh bunch of airports which will be privatized again in the second phase. 6 major airports and I think 7 secondary airports. So totally 13 more airports which will be going into privatization. And that is why they may have said that our spend as a government on civil aviation infrastructure will be on a declining mode. So the government is going to get a lot of concession fee because of privatization. The first bunch of 6 airports will give them 600 crores of concession fee from the private operator every year. So that also unlocks the income. So all along we have been holding assets. 2 things: we did not get money from liquidating those assets, which is privatization. Secondly, we could not realize the annual revenue coming out of this. So the potential of this is now being realized in that sense. This is where the money comes from, or where the rupee comes from and where it goes to. If you see the left pie chart, the taxes, which is all your GST 16, excise duty 7, customs 5, income tax 15, corporate tax 15, it all adds up to about 65%. The rest is 35, which is borrowings. So 65 of the receipts is all taxes, 35 is borrowings. Out of the taxes, like I said earlier, it is almost equal. Corporate tax and income tax, direct tax is 30. The excise duty, customs 12 plus 16 is also close to 30, 28. So it is almost equal. And in my mind, the GST is going to take it away from direct tax collection, or it will be more than direct tax collection. Okay, now coming to the most interested part, and this is my interested section, most favorite section as well. Headline: no changes in income tax rates or any deductions, no new concessions. It is status quo. Whatever was there last year, it continues. Only one small change is that they have said we will cap the surcharge that is currently applicable on long-term capital gains at 15%. So today, the sale of listed shares, which is at 10%, that in addition has a 15% surcharge. So we have slab basis of taxation, and I'll come to that later. So the high income categories, like people who are earning more than 2 crores and 5 crores in a year, they have a very high surcharge rate of 25% and 37%. So this actually, and below 2 crores, it was anyway at 15%. So if we dissect this proposal, while they have said we will cap the surcharge rate to 15%, if we deep dive, it only benefits those people who were earning income more than 2 crores. So people who are earning lesser, their life really doesn't change, because they were anyway either paying 15% or they were anyway paying less than 10%. So this really benefits the high income category, people who are earning more than 2 crores, who are paying surcharge of 25% or 37%, they will now pay only 15%. So while it is widely seen that it is benefiting everybody in that sense, in my mind, it really doesn't benefit everybody. It benefits only the high income categories. Then some COVID related relief. This is not new. This is something that they had anyway announced in the last year to say that if any expense reimbursement is given for medical treatment of a COVID affected person, either by the employer or by anybody else, then the entire reimbursement will not be seen as income of the recipient, of the patient. Second part is, they have said if anybody receives an ex gratia on account of the death of a COVID patient, the family of that patient gets an ex gratia amount. The question was whether that is taxable. They have said it is not taxable, irrespective of the amount, if it is received from the employer, or if you receive it from anybody else, then it will not be taxed up to 10 lakhs. So this is something which they have now formalized, which was already announced in the last year. Nothing new in that sense. Now here is a summary of the different income tax slabs as of today. After
Sharath, what about capital assets which are unlisted? Tax on that, long-term capital gains.
Yeah, long-term capital gains, the base rate is 20%. The surcharge rate is now capped at 15%.
Yeah, okay.
So this is the slab rates, and for individuals and for HUFs, there are two regimes. 2 years back, they introduced. So what the government is, just to step back, the government is saying as a tax policy, we want to move to a simplified tax regime, remove all the concessions and give very de minimis concessions. Like for example, for your retirement savings, we will give you some concession or exemption because that is a necessity. But we will not have unnecessary exemptions and concessions. We will try and make it simple, be it for individuals or be it for corporates. Even for corporates, they are moved to no concession, no exemption regime with a flat rate of 20 to 25%. So that is the overall direction in which the government is going. And therefore, the revenue secretary also said in one of the interviews that we want more and we want to introduce simplicity in the tax regime and remove all these concessions and make it less simple. Of course, we are mindful to not increase the effective tax rate for individuals at the same time. And they said that it will happen over a period of time because the more we make it simple, he said that we now going to focus on the simplified tax regime and not introduce any new things for the old regime. So if you see here, the difference is that up to 15 lakhs of income under the simplified tax regime or the new regime, there is a saving of roughly about 75,000. So how is it 75,000? If you look at 5 lakh to 7 lakh 50,000 slab, under the new regime, the tax is 10%, old regime 20%. So there is a saving of 10% on an income of 2.5 lakhs. So that is your first 25,000. Next slab of another 2.5 lakhs, there's a saving of 5%, 20 minus 15. So that is 12,500. So that is 37,500. Similarly, for the other two slabs, there is another incremental saving of 37,500 up to 15 lakhs. So put together, there is a saving of tax of 75,000 under the new regime compared to the old regime. Now, the point is, under the new regime, there are no deductions, no concessions, very de minimis. There is no deduction, for example, on all your investments, where you get a 1,50,000 deduction under the old regime. There is no scope for setting off your house property loss, whereas that is still available under the old regime. So these are the differences. Now a question may come in your mind. So what should one do? Should one go under the old regime, or should one shift to the new regime, or be under the old regime? So in my mind, most of us will remain under the old regime. So the math is simple. So 75,000 is the tax saving. You divide 75,000 by the peak tax rate of 30%. That will give you about 2,25,000. Which means if you are having deductions under the old regime of 2,25,000 or more, then it makes sense to remain under the old regime, because If you're getting concessions of more than 2,25,000, you're saving tax of more than 75,000. So it's just a simple math. And this math, if I show you here, if you see this old regime, and this is an example that I have given just to make it simple. So under the old regime, let's say there is, so both old and new, salary of 20 lakhs. Most of you may be aware of this, but I've just put it here so that it makes it simple. So under the old regime, there is a standard deduction of 50,000 not available under the new regime. HRA, house rent allowance deduction, leave travel allowance deduction, ETC deduction for all your investments. All these are there in the old regime. It is not there in the new regime. If you add up all these deductions, 50 plus 120, 170 plus 50, 2,20,000 plus 1,50,000, 3,70,000. 3,70,000 is more than my math of 2,25,000. That is why if you see here, the tax under the old regime is 3.13 lakhs compared to 3.51 lakhs under the new regime. So the old regime is continuing to be beneficial. So that is the math. So whereas if you see below, the total deductions is only 2 lakhs, 50 plus 1,50,000. It is lesser than my threshold number of 2,25,000. That is why here the new regime works out better. So this is the only math that all of you have to do. Is my deductions and savings more than 2,25,000? I'm just giving an approx number, but that is a good indicator. If it is more than that, don't worry, continue under the old regime. Overnight, you're not going to sell off your investments. Overnight, you're not going to come out of your retirement savings. Overnight, you're not going to stop investing in provident fund. Overnight, you're not going to stop buying medical insurance policies. You will not do that because these are de minimis requirements for you to have in your personal balance sheet. This is nothing to do with tax. This is something that you will anyway do. So if you're anyway going to do this, you will anyway get all these deductions. Most of us will cross 2,25,000. So simple logic is, in my view, don't look at the new regime. Stay with the old regime. That is the answer. So this is an interesting statistic which the Revenue Secretary gave when he was answering a question saying, why did you not give tax rate reductions to individuals? So he said, I am presenting a simple statistic to you. If you look at the statistics of people who file income tax returns, individuals, first of all, people who file returns is a very small percentage compared to the population. It doesn't mean that people are not earning income. That is important. It may mean that people who are earning income may not be filing their returns. So the government's agenda is to try and get those people in the tax network. So what he said is, out of the people who file, for example, if you see the left table, the non-salaried people who are earning more than 10 lakhs who file returns is only 4% of the total income tax filer population. Then 5 lakh to 10 lakh category is only 8%. Bulk of the people who file their returns is 88%, they earn less than 5 lakhs. So what he said is, if I reduce the tax rates, for example, if he reduces the peak tax rate of 30% and he makes it 25%, who is going to benefit? The guy who is in the 4% category, because he is having a peak tax rate of 30%. If it is reducing to 25, he is going to benefit, not the guy in the 88% bracket, because his effective tax rate is anyway much less than 10%. So this is again a simple math. I thought it is quite appealing to say why there is no need to give a tax reduction. He said, I will give reductions provided this, this number of people who file returns becomes more, or this 88% category becomes much lesser. People, if they move into a higher category, income category, then there is a case for giving concession. So this is the
also,
average.
Sharath, just one point here. Perhaps we'll have to also compare the rates that were applicable a couple of years ago to what is currently applicable, and really see the difference in tax rates and the savings as a result. So there has been a significant change in both the slab rates as well as the slabs themselves. So therefore, over the last 2-3 years, there has been a reduction in overall taxes. That is one. And secondly, like you said, the number of taxpayers are anywhere 2 or 3% of the total, while the 98% are very vociferous about no tax reductions. They are not the ones who are paying taxes.
Right. That is true. Yeah, so the last slab change was actually done in 2014 when they introduced this 250, etc. Of course, 2 years back, they introduced this new regime. But one point which makes sense is in an inflationary world, the value of money keeps going down, right? So the value of the first exemption of 250,000 is actually inflation adjusted, it is actually less. It may be 1 lakh or 1,50,000. So therefore, from a pure inflation standpoint, it may make sense to have a system where you correct the tax slabs linked with the inflation factor, the cost of inflation. So therefore, the 250,000 adjusted to inflation factor should go up to maybe 3 lakh, 350,000 or something like that. So it's an economic adjustment that one has to do, and not necessarily from the point of view of giving tax concessions. That is my view.
Yeah, other thing is of taxing agri income. Most of the agri income is really sitting with those who are the largest income gainers in the country, who pay zero tax. So perhaps if there is a kind of mat on agri income for people who hold either large holdings or over a certain threshold, then you actually bite the bullet. Otherwise, this government keeping quiet on agri income is really a question mark.
No, so that makes perfect economic sense. But no politician in this country is ever going to touch the subject of taxing agriculture. No politician. So it is a very, very taboo subject. It is out of reach for politicians. Economically, it makes perfect sense. Get the rich agriculturists at least to start paying tax. They are making income like anybody else, so why not pay tax? But unfortunately, this is a very sensitive subject which no government and no politician will want to talk about. So this is why there is no announcement for reducing the tax rates. If you see, the average tax paid by a non-salaried individual is about 30,000, by salaried is 90,000. The other reason why, and this is why I also thought they have not announced anything in this budget, is because they're saving all of these announcements for next year. Next year, as all of us know, is the last budget before the 2024 elections. So all of this may again come in next year. So you can cheer up. There is always hope. And you may see these announcements coming in February 2023. Most likely it will come. If it doesn't come, that means there is something wrong in their political strategy. Mostly it will come next year. So next year is going to be a big bang announcements on tax concessions and reliefs. Moving on. So this is the chart where I have shown how the surcharge reduction of 15%. So this is the tax structure today has a basic rate, the base income tax rate, which is your slab rates 5, 10, 15, 20, and 30. Then on top of it, the government levies what they call as education surcharge. And then there is a cess. So these are the three components which add up to your total effective tax rate. So the surcharge that they charge is progressive based on the income earned by an individual or by any HUF or other businesses. So as you make more income, you pay more surcharge. So this is what I was saying. If you see the second row, the surcharge rate of 15% today applies to anybody who's declaring income up to 2 crores, 20 million. And therefore their effective rate is 35.80. So what has happened is they have said that any long-term capital gain income will have a highest surcharge rate of only 15%. So this is what I was saying, that it will benefit only the last two categories. People who are earning more than 2 crores, who are paying surcharge of more than 25%, more than 15% on their income, it will only benefit them. It will not benefit really the people who are earning less than 2 crores. Most of us are in the category where our income is much less than 2 crores, and therefore, really speaking, we may not really benefit by it because we were anyway paying a surcharge of much less than 15%. It will only benefit the high income categories. Now, this is a snapshot of all the different deductions which are there today under the old regime. The example that I gave, keep an eye on 2,25,000. If you're crossing that as investment across all these, you straight away go into the old regime. So these are all which are there for the old regime. These are not there for the new regime. And some of these are life sustaining investments or expenses, I would think, and it's very difficult to discontinue them. And invariably, you will easily touch the 2,25,000 threshold. So this I've just repeated from my last year's slide. Last year, they said that all contributions of an employee into provident fund, superannuation, all of that cannot exceed 7.5 lakhs. And therefore, if it exceeds that 7.5 lakhs, the interest that one earns on the amount in excess of 7,50,000, that will be taxed. So this is a math which I had presented on what are your options today in terms of planning your provident fund investments. So sorry, it's not 7.5 lakhs, 2.5 lakhs is the employee's contribution. So today as employees, we contribute towards employees provident fund. Some of us also voluntarily contribute more, which we call as voluntary provident fund, VPF. Plus we also invest in public provident fund. So today the VPF, which is the provident fund organization, gives the highest interest rate of 8.5% compared to other comparable investments like PPF today is only 7.1%. PPF interest is also exempt. So the math was, if you have this limit of 2.5 lakhs, how should you go about investing? So the math is simple. Out of 2.5 lakh, whatever is the mandatory PF, you first contribute towards that. Let's say 1.5 lakhs. And what is therefore left is 1 lakh. That 1 lakh also you put in voluntary provident fund. So 1.5 plus 1, 2.5 lakhs, you have not reached the limit. So nothing is taxable, no interest on this is taxable. So you get the full pre-tax return of 8.5% on your provident fund contributions up to 2.5 lakhs. Now beyond 2.5 lakhs, if you were investing in BPF, stop that and you put that money in PPF. Beyond 2.5 lakhs, you put your provident fund contributions in PPF, open a PPF account, not VPF, because PPF will still give you a 7.1% post-tax return. Whereas if you put the money in voluntary PF, your post-tax return drops to 5.8%. So therefore, economically, it makes sense to put your money in 7.1% category, which is your PPF. Then now PPF also has a limit of 1,50,000. Beyond that, you don't get interest in PPF. So what do? You again come back to VPF and then put your money in VPF. Simply again a math, because after PPF, that is the next best net of tax return. So this is how you go about planning it. And if you have to just juggle between these instruments to give you the best effective post-tax returns. So again, a summary of the capital gains tax that you will pay on the different investments. I have just summarized it here. So on equity shares, on listed equity shares, you today pay on long-term gains beyond 1 lakh, you pay at 10% without indexation. And on short-term gains, you pay 15%. And the surcharge is capped at 15% on the 10% and 15%. On similarly for listed mutual funds, these should all be STT paid, securities transaction tax paid transactions. On unlisted equity shares, today, if you are selling, you pay a base tax rate of 20%. And on the income that you earn, out of it, you pay at the respective slab rate. So there are two things here. One is on the sale of the asset itself, what is the tax? Second is on the income that you earn, like dividends, interest, etc. What is the tax that you pay? So on the sale of assets on unlisted equity shares, you pay tax at 20%. That surcharge on that, which was as high as 42% earlier, is now capped at 15%. That is the difference. Similarly, for any other assets, long-term capital gains, the surcharge gets capped at 15%. This is a summary of the rates. On debt mutual funds, today you pay at 20%. On interest that you earn, you pay at your respective slab rates. On tax-free bonds, when you sell it, you pay at 10% without indexation. And on the short-term gains at respective slab rates. And income interest that is earned on these notified bonds, it is exempt. So you don't pay any tax on the interest. Listed debentures, again 10% on the sale and on the short term at respective slab rates. And on income interest that you earn, again you pay at respective slab rates unless there is something which is notified as exempt. So this is the overall summary of your taxation position today on the sale of your investments. So just a quick summary of the house property income situation. Again, no amendment has been made today, but I've just tried and put together a section here just to summarize the overall taxing position. So today on the house property loans, housing loans that you take, you have two forms of deduction on the EMI that you pay. EMI has two components, a principal portion and an interest portion. On the principal portion, you get a deduction up to 1.5 lakhs on the loan repayment, which is part of your investments bucket of 1.5 lakhs. On the interest portion, again, if it is a self-occupied house property where you yourself are living in, then on the interest that you pay, you'll get a maximum deduction of 2 lakhs. And I've explained this in an example in the next slide. Whereas if it is a rented house, you'll get the full interest deduction. There is no cap of 2 lakhs. Last year, a few years back, they introduced a new provision to say that if you are buying an affordable housing, they have said it should be a house with a less than 45 lakh stamp duty value, then it becomes an affordable house. If you buy an affordable house for the first time, somebody who is buying a house for the first time and not somebody who already has houses to his or her name, a new house buyer of the value of less than 45 lakhs, they will get an extra 1.5 lakh deduction for interest. So this was to give boost to the housing sector and to encourage more people to buy houses and to give more tax concessions. They said this. So there is a small window of one month more. So keep an eye, and this March 31, 2022 date has not been extended, which means if you are on the lookout for a house and if your budget is less than 45 lakhs for a house, you may as well buy it before March 31st so that you get this extra deduction of 1.5 lakh. So you get 2 plus 1.5 lakh, 3.5 lakh total deduction if you buy a house less than 45 lakhs before March. So this is a small window that is available. You can make a note of it. Now, other points, housing loan, interest deduction is available not only for loans taken from banks. You can borrow from a friend, you can borrow from an employer, you can borrow from a private lender. All of this qualify for interest deductions, but not the principal portion, which is the ATC 1.5 lakh deduction. And it may make sense to buy a under construction apartment because the interest that you pay, you take a loan, you book an apartment, it is still under construction, you pay interest during the construction period. Of course, today there are products which make it look as if you don't pay any interest during the construction period and only after possession. But assuming you pay interest during the construction period, that interest is also available for deduction in 5 installments after possession. But it is subject to the overall 2 lakh cap every year. But this interest that you pay during construction is also available. Third, you may look at buying houses jointly. All of us may be doing this as part of our planning, but again, I've just put it there specifically. If there is a house and if there are, let's say, 2 or 3 earning members in the family, it makes sense to take a joint loan because everybody gets a 2 lakh deduction. If you buy a house in your own name as a single buyer, you get only 2 lakhs interest on the loan. If 3 of you pool in and take a loan for the same house, then you get a 6 lakh interest deduction. So collectively, the economic benefits because of the tax concession is higher. The other thing is last year they introduced a change to say that now you can have 2 self-occupied houses. So it may happen that if you're owning more than one house, let's say you're owning 2 houses. Earlier, only one house could be called as self-occupied, which means the rental value, you could take it as nil. And the second house, you had to artificially treat it as a let out house, which means whatever is the annual rental value, you have to pay tax on it, even if you are not actually renting it out. So that they said, okay, we will give you additional house. So we will make 2 houses as self-occupied. And this is again to boost the housing sector so that more people buy houses. And one house, so 2 houses are self-occupied, and that is the change that has happened. The other change that has also happened is that and I'll explain this more perhaps with an example here. So if you look at this situation, scenario 1 and scenario 2. In scenario 1, you have one let out house, you have one self-occupied house. The let out house annual rental is 10 lakhs. You have taken a housing loan on both the houses. So this is how it will work. On the interest on housing loan for the first one, you pay 13 lakhs interest. And on the second self-occupied house, you pay 5 lakhs of interest. So total interest that you're paying is 18 lakhs. Now the deduction that you get for the interest on the let out house, you get full 13 lakhs. On the self-occupied house, there is a cap of 2 lakhs. So you don't get more than 2 lakhs. So while you pay interest of 18 lakhs, you get a tax deduction only for 15 lakhs. So you lose that 3 lakhs. Now, what happens is your loss from house property is 10 lakhs of rental minus 15 lakhs of interest, which is negative 5 lakhs of loss. They introduced a rule to say that out of 5 lakhs, we will allow you to set off only 2 lakhs for the current year against your other income. If you have salary income of 15, against that you can set off only 2. The balance 3 lakhs, you can carry it forward to next year and so on up to 8 years. So you don't lose that, it's a timing difference. Now, if you have, let's say, scenario 2, where both the houses are self-occupied, like I said, annual rental value is nil. You pay again the same interest of 18 lakhs, but the tax rule says you don't get the full 18 lakhs. You get only 2 lakhs as deduction, and therefore you lose that 16 lakhs of interest for tax purposes. And 2 lakhs you set it off against 15 lakhs of salary. The net position looks to be the same, but actually in the second scenario, you lose out on the extra 16 lakhs of interest, because it is restricted to 2 lakhs. Irrespective of how many self-occupied houses you have, you only get 2 lakhs. So now if you give some thought to the suggestion that I made, that rather than buying single owner, if there are many earning members in the family, you split the ownership of the property across those many members, so that 2 lakhs can become, let's say there are 3 earning members, it can become 6 lakhs, right? So for the same 2 houses, and let's say 3 of you take joint loans for each of the house. So you have 6 co-borrowers. So 6 into 2, 12 lakhs. So you are getting a deduction of 12 lakhs as against only 2 lakhs. So your loss on interest is only 6 lakhs as opposed to 16 lakhs. This is an amendment which they introduced.
Why would you not have a income on the second house, or the first house rather, instead of showing it as self-occupied? Suppose one of the borrowers just rents it out to the other one, shows the interest, shows the income as taxable, the entire amount can be claimed, right?
It can be, but these are all little suspect transactions, transacting with oneself, husband letting out to wife, wife letting out to children, all of that, and all of them staying in the same house.
No, I am not talking of people staying in the same house. There could be co-borrowers, but not staying together.
Could be. If they are not staying together, then that makes sense. But if all of the 3 people are staying in the same house, then I don't know how we can make that work.
The only problem there is you need to deduct tax at source. So you need to be careful in doing that. It depends on the sum, how you are at the end of all your calculations.
You need to keep it under the TDS rate.
So
yeah,
that's what I said. So that's an element.
Yeah, that is why our business has started accountants keeps running. That is why we are here. Okay, moving on. So this is a new, more from the perspective of reposing trust in taxpayers. They have said that, so the example that the government has given is that today, if you look at it, every taxpayer has what is called as an annual information statement. It is a statement of all transactions of an individual which the government has. Today, data is available with the government at the click of a button. So there are about 46 categories of transactions, details of which is with the government, right? Now, genuinely, when you file returns, so when do we have to file returns? So for example, for this year, March 22, we all have to file returns by July 31st, unless it is extended. And then there is additional time available to file a belated return or a final return, that is by December 31st. So you have extra time of 5 months, but that's it. After that, if you detect some income which you mistakenly or by mistake you didn't report it in your earlier return, or you realize that you got some additional interest by seeing the bank statement which you missed seeing, there is no way today you can file a return to declare that income. Now, if your case is selected for audit by the income tax department, generally they select very less cases, but supposing they select your case, and if the income tax department detects your income, and then they say, oh, you have not filed this income or reported this income, I'll levy tax extra, of course, but on top of it, interest, penalties, etc. There was no way that an individual could have said, look, I could not file my return, although I had detected this. So what they are saying is, we will give you an opportunity to declare some income which by mistake you may not have reported by oversight or by mistake. And we will give you time of extra time up to 3 years from the end of financial year. So for financial year ending March 31, 22, there is time up to March 31, 2025 to file an updated return. The only catch is your case should not be already under audit, in which case you don't get this benefit, and then you can file a return. They've also said that if you're filing a return, you will have to pay some extra tax. So this is the example that I've given. So supposing you missed reporting, let's say 50,000 of some income, let's say interest income. The regular tax on this at 31.2% effective rate is 15,600. And let's say you detected, and this is for the running year, financial year 21-22, you detected this income, and let's say you detected this 2 years before, after the end of financial year, that is before 2024. The new rule now says that on top of paying the tax of 15,600 on this missed income, you also have to pay interest. Interest starts from April 1, 2022 till the date of your detection. 1% per month, let's say it is 5,000, total 20,600 is the regular tax and interest which you would have paid. Because you are filing it now, a sort of penal interest tax comes here to say, on top of 20,600, you paid 25% of that. So 1/4 of 20,600, which is 5,150, you have to pay additionally for reporting it late. So it's a sort of a penalty in that sense. But it is much lesser than the penalty which the tax office would have levied had they detected the income later on. So in that sense, it is lesser, but still they are collecting more taxes. And maybe they are trying to say, be more vigilant, because today we have all the information. That AIS as a statement is also available on your respective income tax dashboards. Please get your accountant, if you can't access it, please get your accountant to review that and see what income have you missed, and therefore report all your income. So in a way, they are saying, don't miss out on income and report it on time. And if you detect it after 2 years, but before the 3rd year, that penalty rate goes up to 50%. So instead of on 22,600, you again pay another half of that to make it 33,900. So therefore, this is something innovative that they've introduced, which achieves 2 things. One is to give the benefit of doubt to taxpayers they may have missed. But at the same time, they are saying that we now have all the information. That information is also shared with you. Please take a look at it before you file your returns and try and ensure to not miss anything so that you don't have to land up in this situation. Senior citizens, in a nutshell, again, nothing has happened in this budget, but just a quick summary. So there is a small slab change for them, meager 2,500 if you are more than 60 years, less than 80. If you are more than 80 years, you get a saving of 12,500 on the slab rates. If you're more than 60 years, you have an additional deduction for your FD interest income of 50,000. Everybody gets a 10,000 deduction on their SB, savings bank interest. You, as senior citizens, get another 50,000 on FD interest. Last year, they introduced a rule to exempt filing returns for senior citizens more than 75 years if they have only pension income and bank interest income and they have only one bank account. These are the conditions. Then in that case, you don't have to file a return. The senior citizen has to go to the bank and tell them, this is my pension income, this is my interest income, you please deduct tax yourself. So the bank has to then calculate the overall tax and deduct that tax on the interest income that they pay. You don't, as a senior citizen, have to file return. But the catch is, if you have any other income, like any investment income, like capital gains, or if you have more than one bank account, then this rule doesn't apply, which means you still have to file your returns. I think this is an area where they can try and give more concessions and try and make life simpler and easier for senior citizens above 75 years. For example, if you have more than one bank account, it doesn't make sense as to why you should not get this benefit. Let the banks coordinate amongst themselves and let them figure out and let them do the TDs. That is the way I would have looked at it, rather than getting the senior citizen to file a return. So some points from a consumer perspective, your half carat solitaire diamond ring may cost a little lesser, not much, about 2,500. I've taken some imaginary numbers here. Imitation jewelry becomes a little more expensive. On imported imitation jewelry, it goes up by a fairly big 250 on every 1,000, so by about 25%. Customs duty on headphones and wearables goes up marginally by 5%. Something on imported cocoa beans, which is not used so much in chocolate manufacturing because we use processed cocoa butter. So imported cocoa beans, custom duty has been lowered, perhaps to say that you import cocoa beans and make the processed cocoa butter here rather than importing the processed butter itself. Something that is not there, but I picked this up in some analysis to say that the petrol costs may go higher after October by 2 rupees a liter because there is a new levy of 2 rupees for every liter on non-ethanol blended fuel, which in common parlance is the petrol that we all use. So this may go up from October. They have not again introduced right away, maybe keeping the elections in mind. Other thing is, if you have noticed, the oil companies have not been increasing the fuel prices for a fairly long time. This is again election oriented. Come April or May, after elections are out, you will see another increase in the oil prices simply because the international crude has gone up. The prices have gone up. But here domestically, we have not seen a price increase on the petrol and diesel that we consume. So this is very likely to go up in May. Along with that, another 2 rupees from October. So this is something which is coming. Some other points which I have put there, for example, the Provident Fund organization said that, and this was to help people to cope up with their pandemic medical expenses. They said you can take a non-refundable advance from your Provident Fund balance. Typically, Provident Fund is withdrawable only after 5 years of your service, not before that. So they came up with a concession to say you can take a non-refundable advance, you can withdraw up to 3 months basic or lesser of, or 75% of PF balance has to be maintained. Whichever is lesser, you can withdraw. There's no official announcement on this, but this is a circular issued by the PF organization. Contribution to national pension scheme, there is still a disparity, whereas in this budget, they have removed the disparity between state government employees and central government. State government was 12%, I think. Central government was 14. They have made both 14, but private sector employees still have a cap of 10%. So that disparity still continues. So one important change that they have done, which is a very good change, the medical policy taken for people who are differently abled. So today, if there is a medical policy for differently abled which provides for an annuity and a lump sum, then the person had to wait for the death of the sponsor or the subscriber who subscribes. So there are parents or guardians who may have differently abled wards in their family or closely related. And if a policy is taken by the guardian or the parent for the benefit of this differently abled person, then only on the death of the person, if an annuity or lump sum was received, only then it was tax exempt. So now they have made it logical to say that the moment the sponsor crosses 60 years of age, let's say the parent becomes a senior citizen, and then if after that, if the scheme allows for a payment of annuity or a lump sum, then also it is not taxable. So somebody doesn't have to wait for the death of the sponsor or the subscriber to get the tax benefit. Very logical. If somebody is crossed 60 years of age, then they may not be mobile, they may not be earning income themselves, and they may not be able to support the differently able. So this makes perfect logic to say that, okay, we will recognize this and we will advance the tax exemption. So that was all about individuals. So charities, I'll quickly breeze through this. They have done fundamental changes. The bottom line, what they're saying is we want effective monitoring and implementation. Maybe they have seen, based on their data, there are a lot of non-genuine charities. And we had seen the huge hue and cry made by charities whose FCRA, foreign contribution registration, was not renewed. It all the way went up to the Supreme Court. Supreme Court said nothing doing. If it is not genuine, it's not genuine. You'll not get the registration renewed. So maybe the government is trying to focus on getting all these charities to be genuine charities so that they don't misuse the tax concession. That's the overall theme. I'll not get into detailing here. MSMEs, again, no change. Tax rates continue at the same. Some GST changes they have done, especially on the lines of availing credit, etc. And these are beneficial changes which should help the MSME sector. But the point still remains that they will get GST credit only if the vendors file their GST returns. So there was confusion whether credit can be availed by a buyer who has paid GST on his invoice issued by the vendor, but the vendor has not filed his GST returns. Now they have made it a very strict rule to say unless the vendor files his GST returns, the buyer doesn't get credit. So they want to make more and more people comply with this GST filing requirements. Some other beneficial changes on reducing interest if you have by mistake taken GST credit, which is actually not eligible, etc. So overall, mixed bag. Some good changes, some compliance-driven changes. Corporate tax, I'll not get into this because not much of change. Of course, there is change in the detailing of some of these provisions, but at a headline level, nothing much has changed. So I'll just skip this also for almost crossed my 1 hour time easily. Indirect tax, nothing much other than the GST thing that I spoke of. PLI scheme, they are expanding, like I said. Unaddressed expectations, as they call, getting petroleum products into GST framework, that has not yet happened, and a few other things. So that's about it from my side.
Gautam, can I go ahead?
We'll see if there are any questions.
Yeah.
कल कोणाके काले विचारचेस काय शरद ममक
वय माक्क विचारचेस शरद राजीव उलयतास कल्याणपूर राजीव.
Yeah.
When do these provisions come into effect? After it's approved, the budget is passed in the parliament. When do these provisions start applying?
Yeah, normally it starts applying from April 1, 2022, from the next financial year.
Okay.
Technically, it has to wait for passage of the finance bill by the parliament, both Lok Sabha and Rajya Sabha. That happens sometime in April and May. But you can assume that most of these will go through. And you can start planning, assuming it will be passed. There will be some minor tinkering between now and then, but most of it will be passed.
Thanks.
Sharath, I had a couple of observations. on the revenue and other fronts that we're talking about, on the budget plan itself. One, I think on the revenue side, given the good collections that have happened in indirect taxes as well as direct, with Q3 becoming much more better for corporates, do you think that there is an underestimation of revenues in the budget? That is one. The second thing is, oil imports obviously are going to hurt this whole budget mechanics. Oil has been considered at, I think, $75 a barrel, and it's already up at closer to 100. So if it goes beyond that, I think there is going to be a huge hit on the outflow. And with increased, the economy going faster, there is going to be more consumption of oil. So what do you think about these two things? That is one. Second, in terms of borrowings, there is a deficit of, say, 6.4%. Borrowings have to be upped. Already the government rates, the bond rates, 10-year bond rates have gone up to, say, 6.9, closing nearly 7%. If the government goes out to borrow, I guess the rates are going to even spike higher. So is that built into the interest cost? Is it sufficient? That's the other side of things.
Right. So on the first point, yes, the tax revenues, I think they have given conservative estimates. Their actual collections will go up by the end of this quarter, by March 31. So they have estimated lower collection. That's why they have estimated a higher fiscal deficit. So that's why I said that it should not be actually 6.9. It should come down to 6.6 to 6.7. Because the buoyancy of tax collections is such that it will actually go up. We have hit 1,40,000 GST last month. It will go up again. It will cross 1,50,000 soon. So that is, you're right. So the actual deficit will come down because of the lower estimations. Second point you made on the crude prices having gone up. Yes, that is what I said, that we are sitting on a time bomb. The oil companies have not increased the prices. So please budget some extra fuel expenses in your personal budgets next year. It is definitely going to come. Now, on an overall basis, my view is that if there is a major shift towards EV, and if they are pushing this battery swapping policies, giving more push for electric vehicles and reduces the dependency on fossil fuels, on a long-term basis, I think we don't have to be too much bothered about the crude prices. And maybe because of that also, crude prices may start coming down if the demand offtake is lower. So overall, it should stabilize in the long term, but we don't know. It will take some more time. But in the short run, definitely the crude prices will impact the daily fuel usage that we have. Third point, yes, the borrowings are going up. The yields have actually shot up. The 10-year benchmark yields of the government shot up on the budget day by a significant, I think 40 to 50 or 30 basis points. Again, the strategy there should be, if you have long-term bonds in your portfolio, please come out of it. Put your money in short-term instruments, which will give you a higher yield. And that is definitely, yields will go up because of the borrowings. I don't know if I answered the third question properly, but that's my understanding of it.
No, my point was, with more borrowings, government will have to borrow much more to meet the deficit. And perhaps with more bonds coming out in the open, there could be a glut of bonds, which really means that the demand supply is going to raise the interest rates even further.
Yes.
Cost of borrowing is going to go up, and have they actually provided for it in terms of interest? That was what I thought. Maybe they were a little conservative on both sides, but that is okay on both the revenue as well as interest side.
So they may be conservative if they are aggressive enough on their privatizations and disinvestment. If they make a bumper gain from LIC, which is 1 lakh crore, and they also continue with the other disinvestments and privatizations, that will automatically bring down the base of borrowing. So therefore, on overall basis, the average interest cost may come lower if they succeed on this plan. That's how I would look at it. It may not go significantly, therefore, if they implement this disinvestment policy rightly.
Okay, from my side, sorry, I just wanted to intervene here. There are a couple of things from my side on this aspect actually. First, we are actually comparing yields from in India versus the yields in the US as well. What is really happening is the spike you saw yesterday in the yields for the US was more in line with what happened with the employment data which came in yesterday, where employment all of a sudden reflected 500,000 plus people employed versus a much lower expectation. Um, what happened there was, you know, all of a sudden people started thinking that oh, everything is now hunky dory. You know, the economy is back on the rails. Quite possible that there'll be the GDP growth in the US will start going up. There'll be inflationary factors coming in because the rate of, you know, what is happening is in the US, the rate, you know, and that is because there is data available with them for every week. If you look at data which is coming in from there, every week the amount paid to the employees, the employment uh, there, the rates are going up. So what everyone is expecting there is inflation. To add to all these factors, the supply chain factor is a very important aspect which is there across the world. What is happening because of that is you have all commodity prices going up due to this shortage of materials which are coming in. You know, so if COVID, for that matter, goes off within the next 3 months, you have the oil prices which are going up. The reason being a problem in Africa, a problem in Ukraine. If these two problems are set aside, oil prices will start going down. And I'm literally saying this from a technical analysis point of view, where both the yields in the US as well as India, oil prices again likely to come down in the short term as well. So, you know, you don't have to really fear this problem on inflation. All that is happening with yield price, you know, the yields going up is due to these factors. So it's not a big issue, but yes, what Sharad said was right. Oil prices assumed in the budget, if they were 75 and currently they are about 90 to 92, we will end up with that much higher deficit, which will have to be borne. And that might be one of the reasons why they are actually having the deficit higher than Sharad, what you are saying as 6.6.
Yeah, interesting, Sandeep.
Yeah, any other questions? I think.
No, I don't think so. You can, Sandeep ma'am, you can do the formal vote of thanks.
Yeah, Sharath, I think it was an extremely educative, you know, analysis of the budget. I've attended at least 3 or 4 sessions already. With one being, I was one of the panelists in the on the first day itself at 5 o'clock. If you had seen the ad, where the analysis was, at a gross level. You have gone to a micro level, split up everything, and it was you've really, what should I say, done an extremely good job, and we all thank you. And I would say that, Mom actually said that, you should be a speaker every year. We should actually announce this in the previous month, that you would be a speaker in the coming session, in February, when the next budget comes in for 2023. Because I think the analysis done, especially, I've never seen anywhere the analysis of actuals versus the budgeted. And that was an exceedingly important aspect, which you have actually thrown light on. So Gautam ma'am, I think you should take note of this and keep it on record. And with Sharad's, acceptance, you should go ahead and keep him as the speaker for lifetime. Okay, and after thanking, in fact, I just wanted to highlight a few other points. The one thing which I would want to make, and that is, we very briefly, there was a question on the RBI currency. I've not seen the article which you have, Guru Nandan, you had sent across. I think you can send it to me on my mobile and I'll have a look. But from my aspect, I don't see any reason why blockchain technology should be an impediment to coming out with this, because it gives you two factors. Now look at it this way. You have Bitcoins and you have other coins or tokens which are coming in like crypto. Tokens are exchanged. If one has a token which is on blockchain technology, this is something which can be exchanged versus the physical currency, and the accounting which is done can be done in a fashion where you have the physical currency as well as the digital currency, and the accounts of the RBI will reflect an overall picture of both physical as well as digital. And at that particular point of time, you will have what is naturally a factor where you say liquidity in the market. Is it very high? Is it low? Is it enough to see whether demand or inflationary factors get impacted? That can be watched. So like I said, in my reply, I have a person who's already done a small prototype. I would not say an actual program. He would like to actually go to the RBI and say, I can do it. But that is something which I know can be done. And it can be done mainly because this guy, it's not something which is on IBM, the Ethereum blockchain. This guy has developed his own blockchain technology or a platform. So it'll be much, much cheaper. It is made in India again. It is much, much cheaper than what you would as a Ethereum developed package. One important, or rather many important factors which are there in this budget relate to the digital element on the budget. You're going to have e-passports. Okay. In fact, Sarath already said e-land records. And what? Digital university. And there's a lot of things which are coming digital. And I would just want to say, where are we heading? Mr. Modi said in advance 3 years back that we want to go digital. Where are we heading? We are heading towards what the US is. You have the Aadhaar card, everything will be linked to the Aadhaar card, mind you. And each and every record of yours will, whether it is the land record, whether it is the property record, whether it is the passport, every damn thing will be linked. And we are heading towards digitalization from that aspect. So the micro element of what the dream which Mr. Modi showed 3 years back is now being announced. So that's what is one thing. Another aspect which I just wanted to point out, and this is extremely important. It won't happen in the short term, but what I am looking at is in the long term, when people in the villages, you talked about the core banking system for the post offices. When it reaches the villages, everyone has a mobile, everyone has digital currency. What is going to happen is physical currency will go off. What will happen to the black money? Has anybody thought about that? We should not be having any black money in the future. I for one, believe we are headed towards that, and that will be an excellent, proposition. And I've been talking about it for the last 3 years. Digital currency, to bring in digital currency and go towards, a cashless, physical cashless economy to root out all corruption, root out all black money. Then there is one more thing, in fact, which, I just have to be mindful. Any of you who are doing cryptocurrency trades, there's a 1% deduction on the sellers. When money is paid to the cryptocurrency sellers, there'll be a 1% deduction, which means they'll be noting by way of, records of who is doing the trades. So previously it was not there. It's going to come in now. So that is one more factor which is there.
That's there on property anyway.
Exactly. It's there on
above
property.
a certain limit though.
Yeah, but at least property is a known fact. But cryptocurrency, who issues cryptocurrency doesn't know. Who invests in cryptocurrency is not known. That's one of the reasons why this 1% has come in. Another factor which is there, and an important factor, is the economic impact. And this is what Mr. Modi had in mind when he went to abroad and said environment. There was talk on solar energy. There's coal gasification also. So there are a lot of factors which are in progress, which can actually change the whole mindset of the Indians. Environmental will be clean. Not only that, even for that matter, in the villages, whatever is being burnt, for example, in Haryana and other places, if that is utilized for gasification, it changes the entire environment problems. Then there is education which might be allowed in the gift city. People from abroad might be allowed to actually open up a university in the gift city. In terms of PLIs, an excellent scheme. Tesla is actually pressurizing the government, but the government is not listening to them and is saying, no, we won't allow you to import. You very well, manufacture these vehicles in India. That's a very good argument. In terms, I think that's about it from me. And once again, I would like to thank, and again say, Gautam, make him the speaker for the next year as well. Thank you very much for giving us your thoughts.
Yeah. Thank you, Sharath ma'am. Thank you, Sandeep ma'am. Rajiv ma'am, would you like to have a closing comments from CSN?
You're on mute, Rajiv ma'am.
Yeah, thanks for pointing that out, Sandeep ma'am. Sharat Nasolista, but I would still like to express my heartfelt thanks to him. Very informative evening, and he has very generously shared his knowledge with all of us. And of course, Gurunandan ma'am and Sandeep ma'am added, further value to the discussions by sharing their thoughts and information too. Thanks to all of you. I'll now do the Samapti Pratana. Nandantu sadhaka sarve vinashyantu vidushaka avastha shambhavi mestu prasannostu guru sada sarve bhavantu sukhinah sarve santu niramaya sarve bhadrani pashyantu ma kashyapniyat. Om Shanti Shanti Shanti.